everybody. Ben Nelson here, the Everyday Real Estate Investor. Thanks for tuning in. I am super excited to have an awesome guest today. We talk a lot about, being a busy person and, having a lot going on, whether you're a busy professional or just family person or whatever else you have going on, and not using that as an excuse to not be able to get in the game of real estate investing because it's such a powerful tool. So I'm really excited for our guest today because he provides a service where you can really kind of get in the game in some great markets and not have a whole lot to worry about, right? He provides a lot of the service that you need, but you can still get in the game of investing. So I'm going to welcome Zach Lemaster, Rent to Retirement. Thanks for being on the show. Appreciate it.
Ben, thanks for so much for having me. We're excited to be here. I think a lot of what we're going to be talking about is going to be very applicable and interesting to people, basically about how, turnkey investing. How do you start investing across the country in the best markets with a team?
Very good. Awesome. Well, let's get into it. So first I wanted to start out with, tell people maybe just a quick version of where you started. How did you get into real estate investing in the first place? And then how did that lead to what you're doing today and providing for people?
Absolutely, I'd be happy to. I'll try to keep this as concise as I can for you with a highlight reel. But my wife and I have a background in healthcare, Ben. So we were both optometrists by education, went to professional school for many years, lots of student loan debt, et cetera. I was on Air Force scholarship with in professional school, and then so once I graduated from optometry school, I went into the Air Force for multiple years as a captain, practiced there. That's where we started to really invest in real estate. Even our first house was basically a house hack. We lived in a duplex, rented out half, leased the other half, ended up keeping that as rentals. And we really liked the idea of what real estate provided. I was interested in real estate well before that point, just reading a lot of Robert Kiyosaki and things like that.
Mm-hmm.
Really liked that idea of investing. But throughout our journey, we've kind of had this transition over many years where we have continually invested in real estate. We wanted to ultimately use that as our goal for retirement, as well as additional income streams. And so after that first duplex, every single year, this is one thing I always tell people, we've always bought more and more real estate to help us scale. And it hasn't always been easy, but we've always wanted to grow our portfolio. We got to the point where we started to open the door to investing out of state to where we could obtain better returns, just looking at the market as a whole, the U.S. as a whole, to see where the best markets were from a cash flow perspective, appreciation, not being narrow-minded to just invest where we were locally. And that was really the catalyst to allow us to really dramatically scale our portfolio to the point where we were able to replace our active income as professionals through real estate investing. That didn't happen overnight. I left the Air Force and we moved out to Colorado. We worked in private practice here for many years, still investing. But we got to the point where we were able to replace our income. And I think that's something that a lot of people strive for, or at least like the idea of.
Yeah.
That set the stage for our turnkey business because we basically have already taken the time to go into these areas and establish these teams to find the best markets to invest in, to make this a really systematic approach, to be able to assist other people in doing the same thing that we did by investing in turnkey properties. And so that's kind of the foundation of our company, Rent to Retirement.
Awesome. Yeah, that's awesome. Yeah, I think that replacement of income is a goal for a lot of people, and for some people that's because they want to get out of their job, but for other people, they just you don't want to have to worry about that, right? Like you can do a lot for other people, and you can do a lot more in your life if you don't have that as a burden, right? You can keep doing your profession. You can do a lot more when you remove that obstacle of the income. So that's awesome.
Yeah, no doubt about it. We enjoy healthcare and eye care, but it got to the point where we saw the writing on the wall with how we could expedite and exponentially increase our net worth and our passive income through real estate, not having to practice. We still practice optometry. I'm still licensed, but we do it in a volunteer setting. We
That's
do
awesome.
international and local trips. We love doing that. It's not like we hated our job or
Yeah.
profession by any means, but it's just staying consistent with the real estate to see what it can achieve for people over time.
Yeah, and I think that's awesome. I think that's what a lot of people strive for. Not everyone, obviously, but that's something that's huge to me. Is kind of the whole, make the goal of investing to for freedom so that you can make an impact in other ways, right? And because it holds you back from being able to do that when you don't have the income to support you.
And
So
a lot
that's
of
awesome.
people, yeah, I think Ben too, that a lot of people want to, or when they think about real estate, it seems a little bit daunting because they assume that they would have to self-manage a property. They don't know where to start. They feel like they don't have the time or knowledge to get started. There's still many ways, turnkey being a great one of many, that you can have all the financial benefits of owning real estate, but not have to make that a full-time job as well.
Exactly. Yeah. Yeah. And you touched on something really big for a lot of people, especially people that are just starting out, that, you started looking at other markets outside of your local market to try to get, better results. And I think that's really intimidating to a lot of people, even established investors. A lot of people like to be able to drive by their property and be able to check on it, even if they're not physically doing the property management, just to know that it's there still. Now I have local properties and I don't know the last time I drove by them. So so I'm
Hmm.
trying to like distance myself even from my local properties, because if that's what's holding you back, if you need to be able to drive by it, you miss out on opportunities, right? So but I think it's a comfort level thing for a lot of people. So talk a little bit about your current business now, and get people over that hurdle, right? How what do you provide for people that can help them look at some other market opportunities that maybe are going to give them better returns?
Absolutely. Well, to your point, I mean, investing locally, it feels comfortable, right? Because you know the market you're in. You feel like you do have the ability to drive over there. Although, I mean, that's probably not the best utilization of your time. Really, I mean, is it's really the same process. Been investing locally or out of state. It's all about following a systematic approach. You need your teams in place. Ultimately, if you're growing a portfolio, I mean, if you self-manage one or two rentals, okay, great. But I think the idea would be to scale your portfolio over time and diversify it. Of course, that's essential. Be more of a strategic investor to achieve a better return, and that often means looking out of state. There's a lot of places in the country right now where you just simply can't cash flow. It's
Yeah.
it's so expensive, and it's the barrier to entry is so high that maybe there's a market like Florida, for example, where there's a huge demand and population shift, and we're seeing strong appreciation in rents and price points. But it's still an affordable barrier to entry, and so you can be quite successful there. And so that's how we choose the areas that we decide to invest in and build our local teams. And so rent to retirement is a turnkey provider, and so that's kind of a broad term a lot of people throw around out there. And so what does that mean? Well, turnkey to us means that a house has either been newly built, we do a lot of new construction, or fully renovated, leased and managed by our partners in these areas and these teams that we've established to allow someone to easily come in and invest in the market where they can own property and be a part of that path of progress without having to actively do the work themselves. And we operate, I think, in 11 different states right now throughout the Midwest and Southeast. Single family, multifamily, commercial. We do new construction and build to rent projects. I don't know, typical price points could be that 150 to $300,000-400,000 range, depending on the property you're looking at. Typically, I mean, we have standards for all these areas. These are areas we personally invest in and identify
Hmm.
first to build our teams. We want areas that have landlord-friendly legislation. That's key for building a sustainable portfolio. Of course, have positive cash flow. That's fundamentally something that's important to us or in the path of progress. So, strong population growth, economic diversity. To look at areas that are really up and coming, so you can both get a cash flowing rental, but also be in an area where you can take advantage of the other benefits of owning rental real estate, things like appreciation, debt pay down from the tenant, tax benefits and depreciation. We try to take a comprehensive approach where we're not just selling turnkey inventory. Obviously, we've been successful investors doing this ourselves, walking the walk. We take a comprehensive approach where we try to assist people in building that long-term business model, because there's a lot of things that go into that. You need to have the right tax structure, legal structure in place, making sure you have proper management, proper insurance, financing options. So we really walk
Yeah,
our
there's a lot to it. Yeah, yeah. So it sounds like you've basically put all the pieces of the puzzle together, right? Which is like if you're trying to
absolutely
do all that on your own, especially going into a new market, it's like, wow, I got to find a property manager, I got to find a contractor, I have to find, a real estate agent maybe to help me find the property. I got to learn the laws there, or find an attorney that knows that stuff. And so you've basically made all those connections and built those relationships. And this is a relationship business, right? Real estate is
100%.
all about relationships and knowing the right people and making the right connections. And so starting from scratch that's a lot longer process versus connecting maybe with someone like yourself that has a lot of those resources already.
Yeah, for I mean the right property management company or the right contractor. I mean, usually you don't just find the person you end up working with right out of the gate. Sometimes you may get lucky, but we have to go through 10 or 20
I've
bad
gotten unlucky in that
contractors.
respect, jumping into markets before you
Yeah.
connect with the wrong contractors. So yeah, it's great. I mean,
Hmm.
that's the best way I think to build a team. Is you connect with one person that's great, and then usually they know a lot of other great vendors and providers, right? So you
Absolutely.
start with one person, they know other people that are great in their own niche in the business, and that's how you build a good team.
100%.
Yeah, awesome. So talk a little bit. You mentioned that you're in quite a few markets. So maybe don't go into every market, but like what are a few markets? You mentioned like the southeast markets, right? A lot of those. It
Hmm.
sounds like where you're mostly in. Is that the case in Midwest?
We do about 50 to 60 properties a month. These are properties that are turnkey that are either built or renovated and sold to our clients. And that is, yeah, that's across really the Midwest and Southeast. So it's, but areas that we're heavily focused on. I mean, for the typical turnkey renovated properties, Kansas City, Missouri, excellent market. Indianapolis, we have areas in Ohio, Alabama, Baltimore, and some of these other areas that, and Texas, actually, we have renovated and new construction specifically in the build to rent. That's mainly Florida and Texas. Those are kind of the areas that have the highest population growth of all
Hmm.
states. And that's where we have the highest, supply shortage, really, and the highest demand. We've seen a dramatic appreciation both in rents and price points.
Yeah, it's been crazy in some of those markets how much over the last year it's
So
gone up.
those are the areas you want to be in, right? That's a path of progress where you're going to have strong appreciation and strong rental demand. To give you a very specific example, some of the new construction that we do in Southwest Florida, probably all in for around $300,000. It takes a year to build, or more, probably more at this point, to actually build them. Those houses are renting out at today's value around $2,500. Excellent cash flow on a new construction in an A-class area, but
That's
they're
great.
also appraising in the low 400s. So that's a great way for someone to come into immediate equity to be able to be a creative investor, do cash out refinance, pull a lot, if not all of their money back out, or
Yeah.
even potentially flip the property to a retail buyer.
Yeah, I mean, those are great numbers, right? You can walk into something and maybe you make the acquisition or you get the right financing in place where you can, which you have contacts there as well, I know. So where you can, you get that immediate equity, you could even, very shortly end up with very little or no money invested in the deal, right?
Absolutely.
Um,
Hmm.
and that's I mean, not everybody's out for that, I guess. I mean, if you're, there's people that own property free and clear, and that's their goal and everything. But those of us that are all about leverage and building your portfolio and continuing to acquire, um, getting into a deal with as little as possible is always one of the big goals. And then you get those infinite returns going, right? And no money
100%.
invested, and
Yep.
you're making cash flow. I mean, how does it? Can't
Yeah,
doesn't
you
get
don't
much
have
better
to
than that.
be right. You don't have to be this investor that's trying to find a dilapidated house and do, this extensive rehab in hopes that you're able to refinance and pull your money back out. I mean, a lot of people are looking at that, Burr property, I guess,
Hmm.
if they're familiar with that term, but that can be rather time intensive and have a lot of risk. You don't have to do that if you're investing in the right area. Build to rent is a great way to position yourself. Every strategy has risks and different
Sure,
things
of course.
associated with it, but there's definitely opportunity out there where you can still come into immediate equity within a year, just being in the right place.
Yeah, that's awesome. Yeah. I mean, and again, this whole strategy and this whole service that you're providing is very turnkey, right? You put a deposit down, they hold their spot, it's built. It's yeah, you have to wait a little bit, but um, I mean, they really don't have to do a whole lot to be able to get this thing going.
Yeah, I mean, I always tell people that even though it's turnkey, it's still rental real estate, right? It doesn't
Right.
mean
Yeah.
that you're never going to have tenant issues. I mean, those things happen. You need to be
Sure.
aware of it, but you do have property management in place. We have all
Yeah.
the systems in place, the builders, the contractors, in the right opportunity. So it is an easy way for you to tap into an already established network that has a track record. The numbers that we just talked about, I mean, those are concrete numbers that people have come full cycle. and well, a year ago, those people are actually in at 250 or 260 and selling over 400 now. So we don't know
Yeah.
where the market's going to be a year from now, but being in the right market positions yourself for the best chances of success. And I think the best thing about turnkey, if someone's exploring this as a potential option, turnkey is a great way to get started investing in real estate. If you need a little bit of hand holding, get started investing out of state and learn those procedures to diversify your portfolio as well as scale quicker than you could probably on your own. Turnkey is a great way,
Yeah.
with regardless of whatever anyone is already doing with their investing, you can add, without a lot of time involved, continue to grow your portfolio in some of these different areas. So that's what we love about it.
Talk a little bit about build to rent versus uh, like new construction versus your turnkey remodel products. Now different markets, it sounds like, so that's one of the things, right? Um, are there any other differences that you would say that the turnkey new construction looks this way versus turnkey remodeled looks another way as far as numbers or what people what would expect or anything like that?
Sure. And there's a couple different programs we have for when we look at new construction, the build to rent. We have the model where we build it and it's basically complete. We hold the financing on it. We offer it to clients when it's about 60 days, 60 to 90 days to completion. So it's basically the same process as buying a newly built house. Where you come into a brand new and built house. With all new construction, you have builder warranties, often a comprehensive 1-year warranty, and then like a 10-year structural warranty and things like
Mm-hmm.
that. So very low maintenance in new construction, usually higher quality tenants, longer occupancy and lower vacancy in those, better appreciation. However, higher price points with the new construction, and probably the numbers on paper, your pro forma cash on cash return is going to be less because it's a cost benefit type of ratio.
Sure.
But over time, I really like the new construction. Yes, it's higher price points, but that's, I think, a great way for someone that really wants to be hands off, low maintenance, good performance, and a high appreciation, excellent benefit. The other area of new construction we have is kind of what I talked about with the numbers in Southwest Florida, where someone actually participates from the ground up with us. They take out the construction loan. We have the model built out for them. They have a couple different models they can choose from. And so they hold the financing while our building teams build the houses. That could take 12 to 15 months on average to complete. And then at that point, they can either sell it, because they have that equity position. They can refinance into a long-term loan, a 30-year fixed loan at that point. There are loans that they can lock their interest rate now and do a construction to perm loan. It's not to get too complicated. So that's an area where if you're a little bit more involved in the front end and you're okay being patient, you can build in a better equity position. Now, the turnkey stuff, that's mainly Midwest, and we do have some Southeast areas. These are typically houses that are in that 1950 to 1980 or 90, bread and butter, 3 to 4 bed, 2 to 3 bath, 1,500 square foot house. That's just going to be your blue collar bread and butter rental. Now, we went in and renovated the house to standards to make sure that they're not having a lot of capital expenditures and maintenance. However, you have a lower grade tenant still. I mean, we're not doing this in real low income areas, but that you may be able to obtain a little bit better cash flow long term, because those numbers it's an established area, and you can purchase these immediately in cash flow from day one. You can 1031 into them quite easily, or the new construction that's ready. Ultimately, though, when we help build people's strategy, because we spend a lot of time with our investment strategists to help people map out a roadmap and look at what options make sense for them at that point in time. Usually over time, the goal is to build a diversified portfolio incorporating a lot of these different aspects. Maybe you
Yeah.
have some new construction, some turnkey, and build it from there.
Yeah, that makes sense. Yeah, for sure. Yeah, have a little bit of yeah, you don't want to put necessarily all, there's the different schools of thought, right? Put all your eggs in one basket if you really believe in that basket, right? If you think the market's going to do really well. But there's a lot to say for diversification and different products and different markets. So that's great. So one thing, I'm gonna jump into the market side of it now, because part of what, at least that build the rent model, part of that is somewhat speculative. Say, right, it's worth this
Sure.
today. When you're done, it's going to be worth more when it's worth this today. It's going to be worth a little bit more when you're done. So if that's your strategy going into it, you kind of want to know where the market's going, right? And that's a big question that a lot of people are asking right now. Interest rates are going up. There's a lot of questions about um, where we're headed. Are we headed into a recession? Are we headed into, I hear the word crash a lot. I won't put my opinion in there on this because I want to hear your thoughts first. I talk a lot about that in some of my other videos, but where do you see the market going, and what do you see like as a whole, but also in some of the markets that you work in?
That's a loaded question, obviously,
I know.
Ben, and there's a lot to go through. We could
We're,
probably talk about
you're
that.
being recorded, so we're going to hold you to it. No, I'm
I know. Listen to me at like three times the speed, just to get the gist. But I mean, kind of bullet points, what we're looking at, and we've done extensive research, right? We've been in this game for a long time. We've been through the 2008 period and have held rentals successfully through that period of time. In no way, shape, or form are we in the similar economic or lending or supply situation as we were back then. A lot of people want to jump back to 2008 and think that
Mhm.
that's what for some reason is coming. By no means do we anticipate that that's going to be the case. Markets go through different cycles, and no cycle is exactly the same. You got to look at the economic situation that you're in. The facts that we know right now, first of all, supply and demand. We have a national housing shortage beyond what we've ever seen. So this is all-time shortage in supply. That
Okay.
fact alone will cause real estate to, I think, stay strong, regardless of what else is going on economically or politically. So real estate is a excellent investment still forever. We know that real estate always appreciates and rents go up over time, regardless of short-term fluctuations. We've met a lot of successful investors. No one came to me and said, "Hey, I just got lucky and timed the market." All those investors say that they've successfully, consistently invested in real estate over time. And this is the long game. But right now, what we're seeing, interest rates, really what's happening, they're just coming back to normal,
Right,
right? I mean,
right.
all of us think
We've
that
had 3% interest rates for a decade, right? So it's like,
we've been spoiled
yeah,
with all-time low interest rates that was never meant to last, and they were artificially kept low for a reason. Interest rates are just getting back to normal. Anyone that was investing 5 to 6 years ago understand. I mean, this is just where we were at. The numbers still make sense. Houses are still appreciating, albeit it's probably not going to be the strong appreciation as a whole what we've seen over the past couple of years. Houses will still appreciate, especially in markets if you're in the path of progress. I mean, economics 101 is just supply and demand. I think we've covered that aspect. Run your numbers, run the cash flow. But with all time, or not all time, but at least 40-year high inflation that we're seeing right now, you have to do something, right? And I always tell people that
100%. Yeah.
inflation is a tool in real estate. There's no doubt about it. When you have a physical asset, inflation causes your prices to go up and rents to go up, and it also devalues the money that you're lending, right? I mean, if you take out a loan at today's valuation, your loan is worth less in the future. That's a benefit of using leverage. Leverage is a powerful
Exactly.
tool. We did an evaluation looking back at the past 6 times that interest rates over the past 30 years that interest rates rose significantly, and we chose 1% as significance. So now we're in that threshold, and every single one of those times we looked at the following 3 years of real estate, and real estate still continued to appreciate, sometimes more than when interest rates were lower. And so what interest rates rising are really ineffective is proving that we have a strong economy. Obviously, it's to combat inflation, but I could go on and on, Ben. I think the fundamentals is being in the areas where you still have population growth, you still have an extreme demand for housing, and you're going to be just fine. And interest rates, it's just a point in time. You know what
Yeah.
I mean? You're
Yeah.
still, rents will go up over time. We're using some creative ARM products right now. We have a lender that will do a 3.75% at 1.5 points on a 5-year fixed ARM. I mean, that just
Five
makes
years.
sense.
Yeah. Yeah. That's a
So
lot. That's a not bad, not a bad product at all. Yeah. Yeah. And I know people get afraid of the ARM product, right? Because we had a lot of that was, one of the products used a lot back before the financial crisis, and irresponsibly. So,
well, there's negative connotation with it because your arms were completely structured different. I mean, they
yeah.
had no ceiling or floor on how much interest rates could rise. They could change every 6 months. There was no lock
Yeah, there
period.
were way different terms
Yeah.
and products. Yeah, for sure. Yeah, and I think you hit on a key point that going back to making sure you're in the right markets, right? I talk all the time in my videos and the content I put out about people want to throw out these things, this stats, macroeconomic numbers, and all of this stuff, and yes, that is important to look at, but really every real estate market is going to react somewhat differently because you've got mass exodus from one market and you've got max influx to another market. They're going to respond differently to even to high level stuff, right? So you got lots of people moving into, say, Florida. If you have jobs being created there, you have high wage jobs being created there. Uh, you have all of the factors that you need for a continued rise in prices versus, if you're in a different market where people are leaving, you might have the opposite effect.
Absolutely. And a lot of the Midwest areas, I mean, those are slow and steady. They really don't have crazy appreciation, but they also aren't subject to a lot of the fluctuation that we've seen. That's kind of just your bread and butter, slow and steady real estate. So some people that are more risk adverse maybe want to be in something like that where they just know that they can cash flow. And that's really what it comes down to. I think you would
Yeah,
agree, Ben, that as long as your house is cash flowing, you're not looking to sell it. If there was, say, large market dip, it really is irrelevant if you have a property that's cash flowing, and usually in those times you have more renters. So
yeah,
as long as you have a property that's cash flowing, all real estate goes up over time. You got to do something with your capital instead of letting inflation eat away at you. And I mean, crypto and stocks, it's all volatile. Of course, I'm very biased. By the way, I don't do any investing outside of real estate. This is it for us. But
I do
we
very
know
little.
it.
Yeah, yeah, yeah. You got to understand what you invest in. I don't think you have. I mean, it's hard to. There's so much to know and learn and keep track of in real estate to try to do the same thing in crypto and stocks and all. It's just there's not enough time in the day, right? So okay, I'm gonna go to a different direction. So that was great stuff on the market. I think you hit on a lot of key points that I always talk about, and I think people make the mistake of, you touched on number one. People remember the financial crisis, right? So that's immediately when they say house prices are too high. Which, by the way, what does that even mean? Like, just because it's higher than it was doesn't mean that it's too high for the
It's all
wages
relative.
have gone up and
Yeah.
everything,
Mhm.
right? You got to look at everything. You can't just say it's higher now, so it's too high. Well, that doesn't make sense. Like, you have something to back that. But yeah, so that's the most recent and probably the largest or one of the largest pullbacks we've ever had in history. And so because people remember it, it's fresh. People forget to go back further and see what was the trend back.
Yeah.
Further than
Look
that, what
up.
does real estate traditionally do? And traditionally, it doesn't drop 30 to 40 or 50% in value.
No,
It's a
2008 was
a
the worst.
lifetime event,
It
right?
was the worst real estate crash we've ever had, right? And that, obviously, there's a lot that goes into that. But just look up interest rates, in the low 2000s, in the 80s. I mean, people were still investing. We
Right.
interviewed, who was it? Richard Duncan on our
Oh yeah.
podcast a couple of
Hmm.
weeks ago, and
Awesome.
he was
Yeah.
talking
Everybody
about
should check that one out then for sure.
yeah. So he was talking about interest rates. He was buying properties at 18% interest rate.
Yeah.
It's a different mindset, but he still did. So.
Yeah. Very true. Very true. Yep. Yeah, I think people get caught in the whole, regardless of, okay, maybe we're wrong and maybe the market does pull back. Just say for instance, right? Timing the market, right? Buying low, I got to buy as low as I can so I can sell as high. It's such a limited view of real estate investing, and I think a lot of people get stuck with that. Well, what if prices go down? Okay, well, there's so many other reasons to be in real estate, and if you're trying to time the market and buy when it's at the lowest, you're never going to buy, because if it's you're right now you're questioning, is it going to go down? If it does go down, you're going to say, well, when is it going to hit the bottom? By the time you know it was the bottom, it's too late because it's already started going back. I mean, you can't time the market. It's impossible.
Yeah, we have a lot of really successful investors in masterminds and mentors that I've learned from, and no one has said they've successfully timed the market. But what everyone has said that has allowed them to build just huge generational wealth and this huge net worth in real estate is time, right? Just owning real estate over time. And
Yeah,
so that's what I encourage everyone to do. That is concerned about, trying that is wanting to look at timing the market appropriately. Just look at owning a rental over the course of 2 to 3 years with appreciation, with the debt reduction, with the tax benefits and depreciation, as well as your rental income and increases in rental income over time. You are going to be more successful just owning real estate over time and letting it do what it does naturally than trying to buy a property and time that appreciation wave. That's the wrong way to go about it.
absolutely. Yep. Okay, I'm going to switch gears here. If you're willing to be a little humble, tell us about a mistake that you made or mistakes that you've made over time that other people can learn from. I mean, I'm sure you've never made any, but
One of my mentors, Ben, always told me, in real estate, you either make money or you learn, because he refused to say you lost money, but that's kind of what he meant. You know what I
There
mean?
you go.
So
Yeah, yeah,
that's definitely made a lot of mistakes. And I think that's an important part of being part of a network, educating yourself and learning from people that are more experienced and are where you want to be, because that can help expedite your success and avoid making some of those crucial mistakes that some people have before you. We've made our handful of them. Some of those specifically would be early on, we managed our own properties, and some people are successful property managers. We were too nice. I mean, as far as with tenants, we got too personally. I mean, I liked being a landlord, like, hey, I'm engaging with the tenant. We didn't raise rents as much as we should have, let them get away with more, pay late on rent. And then, of course, then they started to pay later and later because that was now acceptable.
yeah. You loosen
Um,
that leash a little bit, right? Yeah. I mean,
Give a mouse a cookie, right? And so I think that was a mistake once we actually took away, because that wasn't the best utilization of our time anyways. And so that was a big thing, bringing on property management, outsourcing and hiring people to do the tasks
yeah,
that would probably do a better job or allow you to focus on better things like, one, your family, but more importantly, growing the business. If that's really where your heart is focusing on scaling. So self-management was a little bit of a thing for us that we probably shouldn't have done for as long as we did. We formed some bad partnerships. We've invested in some syndications that we didn't properly vet the provider, and even with a general partner on a syndication that had a long track record, we didn't evaluate the deal long enough or deeply enough, and that syndication went sideways and it went upside down. And we still have a 3-year bankruptcy that we're a creditor on, trying to see if we're going to get any funds back. So I guess the lesson learned there is vet people and do your due
that's
diligence.
a
Look at
great.
the
Yeah,
track
that's a
record.
bummer. Yeah, and that's something for sure that hey, I have you on here. Like, everybody should do their own due diligence, right? Just because we're talking and you're saying this market is great and like here's our history, like that's all. That's great, and that's obviously you can show your track record and that sort of thing. But in a 30-minute podcast or something, right? Probably people should do a little bit more due diligence than that, right? And dig into
Call
the
references.
market
Yeah.
and all that stuff. Yeah, 100%.
look at look at your numbers. I mean, talk to the people too, get references, look at track records, and actually evaluate that.
Yep.
You know what I mean? So look at public reviews. I mean, at this point now, we run background checks on people that we're going to be lending money to.
Yeah.
And we've been surprised on what we've come up with sometimes, looking at public lawsuits and things like that. But you got to do your due diligence. Other mistakes, jumping into we do a lot of commercial. That's one thing I didn't mention though, Ben. Right now, really what we're doing is doing a lot of 1031 exchanges to buy larger commercial retail centers that we then run like cost segregation studies on and take full advantage of the tax benefits of those. Um, but I mean, that's a whole different ballgame
I
of
was gonna
looking
say
at mistakes.
that's a whole podcast by itself, but that's yeah, great stuff for sure. Along those same lines, what do you have any like tidbits of advice that you would give to either people that are like, hey, I'm trying to get in the game, what do I do, or they're maybe stuck and they're trying to scale and figure out how to get over that hurdle?
Real estate is a beautiful thing because there's so many ways that you can participate and be successful, but it's also a hindrance because you get the shiny object syndrome. And when you have too many things that are coming at you and you're not able to just decide, it's more important that you decide on something than I think ultimately really what you decide on. Obviously, you don't want to be, again, jumping into the wrong investment with the wrong people, but it's important that you just kind of you set yourself a goal, and that's important. We've done that over time often when we've taken on too much, and then it's like we don't do anything to our full ability and our full capacity. And so I think it's very important that you hyper focus on one investment strategy at one point in time, and that will naturally open up doors to other investment opportunities. But you really just need to focus on something. If you haven't bought your first rental and you've been thinking about this for 6 months, 6 years, you just got to buy your first rental, however that is, whether it's turnkey or locally. I mean, that's a mindset change. Really, you can read about it and read blogs and listen to podcasts all day long, but you got to get into that mindset of actually doing it. And that's so important. And right now, that may be hard if you haven't, with all this, hype going on in the news and
Yeah.
everything. Like, shut that off, stay hyper focused. I would say that's the biggest thing. And the other big piece of advice for people that are looking at scaling is, if you're having trouble scaling, you mentioned this previously, Ben, this is a networking business, is a people business. Get in some masterminds, get in some groups with the right people. and start building your network. That's going to open up more doors of opportunity. And if your local market is challenging, look at investing outside of your local market. There's always opportunities. I hear people complaining all the time about, oh, you just can't find a good deal here. There's no cash flow. It's too competitive, multiple cash offers. That's the reality in a lot of cases.
Yeah.
So look at a different market.
Yeah.
So hopefully that's some concrete advice for people.
Yeah. No, that's great advice. So stay focused, take action, get connected. Those are basically it. Yeah, and I totally agree. Real estate, it's a double-edged sword, right? It's so awesome. There's so many ways you can get involved. You can be a passive investor. You can, do flipping, which I would say is more of a business than investing. But you can buy a single family. You got all the different asset classes. You have tax liens if you want to go that. I mean, there's all sorts of ways to get involved, which is great, but it's also it can be super distracting because they all have their own appeal and their draw. And so the flip side of that, I guess, or where to start with, I think, because I agree, you got to be focused so that you're not all spread out and all over the place. And a big part of that is starting with what do you want real estate to do for you, right? So I listen to the Real Estate Guys radio show a lot. They're big on personal investment philosophy and starting with that, and that's a big piece of it. Like, what is your risk tolerance? What do you want real estate to actually do to you? And then from there, you go say, okay, well, this market and this strategy will help me make that happen, right?
Be realistic. I love that you made that point because you got to be realistic with what your goals are, but also what your abilities and time is too. There's everyone would love the idea of going out and finding this flip you make six figures on, right, and it to work out perfectly. The reality is
Well,
that
that's what
at
you see
most,
on TV, right?
yeah, yeah, you're watching HGTV, yeah,
Yeah.
and you got this beautiful house that was. Anyways, it's you got to stay focused on what is the reality of what real estate is for you at that point in time. I think a lot of people that are in a very demanding profession or just don't have the time, maybe they have the money to do invest, but they don't have the time or know-how or energy, then maybe a more passive investment is realistic. And
Mm-hmm.
as you grow those passive investments, that can open the door to maybe building your experience and time to be able to take on a more active investment. There's some people that just maybe they just don't like real estate really from the idea of managing tenants. Well, you don't have to manage your tenants, and
Yeah.
things like that. So I
Yeah.
mean, there's a way for everyone to participate, but yeah, set those long term goals, reverse engineer it, and find a way that makes sense for you right now to get started.
Awesome. Love it. Love it. Well, if people like what they hear about what you had to say and hey, they want to talk to you more about the products that you're putting together for people, the turnkey, whether that's the new construction or the remodel stuff, and talk to you a little bit about the markets that you're in, what's the best way for them to reach out to you and get connected? I know you have a podcast as well, so make sure you
Mhm.
mention that as well.
Yeah, absolutely. We got a podcast and YouTube channel that is consistently growing. We talk about all things real estate, not just turnkey. We have a lot of different creative strategies on there and interview some high level people. So our company is Rent to Retirement. That's Rent to Retirement, and the website is renttoretirement.com. That has all our social media outlets and podcasts and YouTube. You can reach out to us. Usually, if you're interested to learn more about turnkey investing, the first step would be to schedule a consultation with one of our investment strategists just to go through. And we don't charge investors anything, for this or on an ongoing basis. This is something where, if you want to learn more about turnkey investing, you have a strategy call. They go through your criteria, timeline, goals, resources, help match you with kind of the right investments that fit your goals and walk you through the process. And we'd love to just have a connection with anyone that's interested.
Awesome. Very cool. Well, I'll make sure to, I did add to my YouTube channel your guys's. So everybody can go to, they can obviously just search for you or they can find it on my channel as well. And I'll link to your website and all that stuff on all the social media this goes out to so that they can connect to you easily.
Excellent. We appreciate that.
Awesome. Well, thanks again, Zach. Appreciate you being here and providing all the information. It was a lot of fun, and I think hopefully everybody learned a lot and found, why turnkey investing might be an option for them to look at. So appreciate you being here.
Absolutely. Thanks so much, Ben.
Awesome. Thanks.